Friday and Saturday. It's going to be, whoops, turn this down. Crypto tips, and today is the Forex free education day. So we're going to go ahead and talk about the crypto tips first. I got caught up on my trade copier and for the flipping challenge for yesterday. So let's talk about some analysis here real quick. Now, where I see where Bitcoin them are going, they're going right back up. You can clearly see on the weekly chart, this new weekly candle is acting as support, as a bull candle going back. And I'm looking for it to retest 7,000. And you can clearly see that this stochastic is starting to cross into the main line. The signal line. So you got a main line and a signal line. So if on the weekly chart, we're probably looking for it to test 7,000 and then to hit the moving average here at 8,000. That's what I see right here. But that's like on the weekly chart. So we could probably see that sometime next Friday. If not, maybe a little bit after the holidays, because we have Independence Day coming up. So you have to be prepared because Independence Day is going to be really, really slow. Don't expect too much market volatility. But Thursday and Friday for Forex is going to be crazy because it's non-farm payroll next week. So I'll touch a little bit base about non-farm payroll after I talk about crypto here. Well, that's what I see here on the weekly chart. I have the MA cross. It's just default settings, and then default settings on the stochastic RSI. Based on the daily, right? Based on the daily, you can see that Bitcoin found support, did not come back down to break lower, right? And because the wick right here was already at the lowest at 57.50. And so I was looking for it to test 5,600 and 5,500, which I didn't see that. Coming from here in the daily chart, you can see that the blue line is your main line, crossing, going up, right, against the orange line here that I have. These are all default settings with the stochastic RSI, 3, 3, 14, 14. And so you can see where Bitcoin's trying to shift. I did hit 6,600 last night, and then retrace right back down. So this is on the daily chart, and I'm looking for it to break 7,000 and then come back to 8,000. So we'll see where it goes from there, especially for over the weekend. Some important tips, especially if you're using the MA cross and the stochastic together. Obviously, by looking at this, you'd be following the stochastic. On the 4-hour, right? This is where it gets tricky, right? People are saying that on the 4-hour, it's overbought. It's overbought. It's coming back down, right? It is. But the MA is already did this crossover here. So it's already letting you know that it's shifting to the uptrend. Very important to not get yourself caught up with this stochastic here. And you want to follow this crossover. This crossover is much more important than following the stochastic. Your bottom indicators for following oversold conditions and overbought readings, right? Overbought and oversold. That's just letting you know that, yeah, it's at a very high reading. But that doesn't tell you that it's going to reverse and come back down. The stochastic is not really accurate, right? It's not as accurate if you were following the 2 moving averages crossing over. I would take the 2 moving averages crossing over versus this stochastic RSI right here. It's a lot more easier to follow, especially when it crosses over, and it's a lot more simple. It's pretty much more simple. If you follow the stochastic, then all you're doing is following when it's overbought and oversold. Sometimes like this, it just sits right here. So how do you know that it's going to come back to 80 or it's going to come back down to 20? But you can clearly see it went right back down. And we were following a downtrend here until there was a lot of support here, and it shot right back up. Your 4-hour crossover is the most important crossover to pay attention to because it's every 4 hours. When the 4-hour does the crossover, you just follow the 4-hour time frame. With the daily, it's going to take some time, right? Based on the daily, it's going to take some time to make this daily these two moving averages crossover, right? But based on the stochastic, it's coming to make that shift up. So, and then I already showed you guys the weekly, right? On the weekly, you can see that this stochastic is starting to rise back up. And like I said, this candle is acting as a support candle, and we could see a possible 7,000 price, and then an 8,000 here, and then from there, eventually this will cross over. So it's going to take some time if you're following this, especially on the daily and the weekly chart. That's why the 4-hour is pretty precise. And when you follow that crossover, especially using the MA cross, I'm not talking about Bollinger Bands here. I'm just strictly showing you the MA cross that I have it set here on TradingView, and just the stochastic RSI default settings. All these are all default settings. Nothing. I'm not changing nothing. This is just a simple method just to look at if you were to just look at, Bitcoin or Ripple. Let's look at Ripple, right? Ripple hasn't made that crossover yet, but eventually it will come back. Bitcoin Cash has made the crossover right here. Ethereum is about to make this crossover. Litecoin, okay, maybe not Litecoin. Zcash made that crossover. Neo coming close. Dash has made a strong crossover. Dash went up all the way back at the lowest from 217 and all the way up the wick at 246. And then this one is a retracement candle. So coming back down. Shot up pretty high. By far, probably one of the fastest moving cryptos from last night. Other than that, I mean, by following the two MAs a little bit is very important, especially on the 4-hour. That way you don't get caught up with the daily and the weekly. And so your 4-hour is your best time frame to look for these moving averages to make that cross, because the moment it makes that cross, let's just draw this out, right? If it makes that cross, it could very well do exactly same as this, or it could just shoot up even higher. And then these two would be far apart if you were just to draw it out based on the uptrend. And so that means the candle will be bouncing off. Usually the candles on the uptrend would be bouncing off the green line, and then sometimes it might bounce off the red line, but the green line is where it usually bounces off. I'm going to check and see what the well, maybe not. Okay, cool. Here it is. Source code has set 9 SMA and the 21 SMA. So you have the 9 simple moving average, and you have the 21 simple moving average close. I use the 10 and 20, but the 9 and 21 is not far apart. So, but I use 10 and 20 just for simple numbers. So by clicking on the source code, it shows you exactly which one it is. Oh, come on. Now we're gonna hop into Forex. Can't go wrong going long with UJ, with USDJPY. It's gonna do a massive retracement going down, which it did. Almost hit 111 on from the last couple hours. Shot right back down. You can see the closing here, resistance, right? Matching. I don't know if it matches this. Doesn't match this, but you can clearly see where it ended up closing, going back down. So in the gap, so Understanding the Sunday open gap, it's going to open going down, right? But it is on a bullish run, bullish uptrend, so it's going to try and shoot right back to where it fell. And it will come to retest 111. Why I say that? If we were to look at the daily, there you can see that it's already breaking this and it's coming to test this. Once it tests this and breaks through, it's going to keep going higher. Now, I'm not talking about the moving average, the crisscross, the crossover, or the stochastic. I'm just showing you based on where this uptrend is going. The weekly uptrend was a really given factor here based on this strong crossover here. And you can see these candles bouncing off the 9-day moving average, because this is your 21-day. The green lines are 21-day. So this is on default settings on TradingView. So you can clearly see this structure riding along the 9-day moving average. People that are following the stochastic, you're gonna get yourself caught. You don't ever follow the stochastic long term on the 4-hour, on the 4-hour daily, weekly, and monthly. If you ever do that, you'll get yourself caught. I'm just being plain honest. You're better off using the RSI or MACD. Talk about that next week. So with this crossover, right? With this crossover, you follow this crossover, right? Until that next resistance on the daily and the weekly starts. Not because this is overbought. Okay, you're looking for it. It's coming back, right? It's closing right here, exactly right here. The new weekly candle is going to redo a little retracement going down, right? But we are looking for it to break 111 and probably come test back to 113 or maybe 114 at the highest from here, because there's so much resistance right here from between 113 and 114. Once it breaks that, then we could probably see 115 again. But that's just a maybe. So from 113 to 114 is going to be a little bit tricky. But following this weekly crossover is pretty strong. The weekly chart and the weekly crossover is much more stronger than the daily 4-hour, 1 hour, all the lower time frames, because the weekly is the second highest time frame versus the monthly. If we were to look at the monthly and look at this crossover, I'll show you guys. Just by using the cross, let me take off the stochastic. Just by using the crossover, right? You can see the 20-day, right, going up, and you can see the 10-day try and go down, right? You can see that. Usually, the 9-day and 21. Usually I follow if the lower moving, if the smaller moving average, right, which is, I use the 10 and 20-day, but this is the 9 and 21. If the 9 crosses going down, then it's going to be a downtrend, right? But by looking, like I said, by looking at the 21 SMA, it's shifting up. Eventually, like I said, eventually this 9 days is gonna eventually shift up with it, unless something major happens, right? Unless something major happens right here, where it does not go above the 21-day, it's going to be a massive downtrend long term. Overall, it has been going down. You can see a lot of resistance, right? Shot down. I mean, it shot up, but this resistance has never come back to retest any of this resistance, and it shot right back down, came back up, but this price never broke this price, and it shot right back down again. And overall, it is a pretty strong downtrend if you were to just keep selling, because it never came back to 125, never came back to 122, never came back to 117. Right here, never came back to 114. Now we're sitting at 111, 110. It's going to be kind of tricky right now because it's sitting in between these two MAs. A lot of people are saying it's going to be a strong uptrend all the way back up to where it started. To me, honestly, by looking at the monthly chart, I don't really see that. Based on the weekly chart and daily chart, yes, but it's already running out of steam. It's already running out of that bullish momentum. And so I could probably might see a 113 and a 114 retest, but I don't really foresee the 115 and all the way back up. That's just my opinion. You don't have to follow me on this, but that's just what I see. Based on this structure right here, it hasn't come back to retest, to break past resistance and to break higher highs. That's what I'm saying. Based on the monthly chart from what I'm drawing out here for you guys. So overall, looking for a strong downtrend for the US dollar for the long haul. After the US dollar is trying to test, one piece price of the dollar tries to test 96. So it did a major drop on Thursday and Friday, but it's still sitting right pretty close to 95. So you can see right here on the dollar. Now, what I'm looking at, the new monthly candle starts tomorrow, all right? I'm looking for this new monthly candle to act as resistance, as a bear candle, and I'm looking for the monthly, right? I'm just shading this in. I'm just showing you my prediction for the new monthly candle to close out. I'm expecting it to close out right back at 92. Causing, right? This is a pretty strong crossover on the monthly for the dollar. Causing this 9-day to shift lower and for the 21-day to shift lower. That's what I'm looking at. Come back to break 92 and then to break 90 and then the 89. That's it. Once it breaks that, we're looking for 80 long term. What I said on my weekly analysis on the last week is we were to look at the monthly chart. There is no other support until we come down here at 80. And you can see how strong this downtrend has been started since last year. Okay? Let's just do the math. And I'll give you another tip here. Let's just do the math, right? Went up 2014 all the way up to 2017, right? That's where it started, right? From June, right? And we're looking at June here, right? Let's just look at that from June 2014 to June 2017, right? You can see that in 3 years, we got to look at the next 3 years. 2020, right? 2020. Where's 2020 going to be, right? Where's the dollar headed for 2020? You have to understand by looking at the future of price projections, you have to know that, okay, for clear confirmation where this trend is going and where price action is going. Most important thing. It had nothing to do with looking at MACD, RSI, and stochastic. Once you get good at predicting the future for the prices, then you can go for the long term of looking at, okay, what's going to happen for next year, what's going to happen for the next 2-3 years, and what is going to happen, for basically when Trump is out of office, right? Or Trump might get reelected. There's a lot of political events that will drive the dollar. It has nothing to do with Forex. It has nothing to do with exchanging the dollar here and there. So pretty important to pay attention to where, like I said, pretty important to pay attention to where they're going to be sending this for the next 2 years, because Trump is still president for 2 years. I'm giving you guys a hint already. I'm giving you guys a hint. Okay, has nothing to do with with fundamentals and economics, but political events do drive the foreign exchange market, especially this whole trade war issue. So by looking at where things are going, we're looking for a long-term sell and long-term downtrend for the US dollar. Unless something major happens, right? Unless something major happens and then the dollar becomes really positive. But we're probably might be looking at maybe another recession, another market collapse, or something majoring, something with the Fed. So we don't know what's going on yet, but you can clearly see some good signs of where the economy is going. right? And where the political events are going, and we can have unexpected events throughout this whole year. And so with Trump being president, you have to expect that, especially for trading in the foreign exchange market, especially during New York sessions. The New York session is by far the most volatile session. It has nothing to do with London. London's only volatile. London's session is only volatile when there's the euro and the pound high impact news, and within the first hour of London. That's it. That's the only time I see the volatility. So other than that, you got a pretty good analysis where I'm going for this. You got some tips on crypto and on Forex, a little bit more on Forex, but and now you get to see where I'm headed for long term. So you gotta remember, if it does not break higher, it's gonna break lower. It's gonna come back to break lower. You gotta remember that. So that's all I got for you guys. Appreciate you guys watching me. And like I said, stay tuned for the flipping challenge. Those that are participating, and that's going to be starting tomorrow. So that's it. Have a good upcoming July 4th weekend, and I'm going to be camping. And so have fun with the fireworks. Don't get burned. And that's it. Happy holidays. Don't be trading on Wednesday. Like I said, you trade on Wednesday, you shouldn't be trading on a holiday. I'm just letting you guys know right now, it's going to be really slow. Take a break. Get ready for Thursday and Friday, because Friday is not farm payroll.